Please welcome to the stage Jessica Howe, Carrie Culkins, Daliana Mulch, William Ury, and Ethan Regal.
Hi, everyone. Good afternoon. I'm Jessica Howe. I'm a partner at 1315 Capital. We're a healthcare growth equity firm based in Philadelphia. We invest exclusively in the healthcare space, and we've been very active investors in dermatology and aesthetics for the past decades. I'm very pleased to have this panel here representing different perspectives, both from the private investor side. So we have Bill Murray and Ethan Regal. We also have perspectives from the strategic side with Daliana Mauk and Carrie Culkins. And then we also have Dan Nicholson, who's coming to us from Jefferies, representing the banking side. Now, I'm going to do something a little bit differently and allow each person to introduce themselves and their organizations, because we don't have just 5 investors on this panel.
Thanks, thanks, Jessica. As you can probably guess from my vest here, I'm in venture capital. Ethan Regal, founding managing partner, Gore Range Capital. We are an early growth stage venture fund focused in skin health, aging, and wellness innovations. Aesthetics is a big part of what we do. We leverage our networks to source, secure, and support innovations in this space, and help and partner with our portfolio companies to get through their milestones better, faster, cheaper to both of our benefits.
My name is Bill Murray. I'm a partner at Healthegy Capital Management. It's a New York City-based private equity firm. We're focused on healthcare products and services. We have about 17 portfolio companies, 2 separate funds, and generally invest in companies with revenue between, let's call it, $0 and $100 million, enterprise value $50 to $250 million, and our equity investments usually are between 25 and 75, with sort of the sweet spot being 30 to 40. Before Hildred, I worked at a strategic, and so I know a little bit about that. I was the chief commercial officer for Allergan for about 7 years. Loved the aesthetic space, and loved the people in it, including Grant Stevens.
Hi, everyone. So my name is Daliana Mauk. I am Director of Business Development and Acquisitions at AbbVie, which is the parent company of Allergan Aesthetics. I've been with the company, the parent company, for 13 years now. The last 5, I've been doing BD&A. But just the last year is when I transitioned to what I like to call the pretty side. So I've been doing aesthetics now for a year. And thank you for having me.
Hi everyone, my name is Carrie Culkins. I'm the VP for marketing for the US Aesthetics business for Galderma. I've been with Galderma now for 6 years. I spent the last 5.5 actually in Europe, driving the product development strategy for the aesthetics products. We have both fillers, biostimulators, and neuromodulators. Prior to that, I was with Allergan. It's a small world, and I'm very happy to be here, so thank you.
Hi, good afternoon. Dan Nicholson with Jefferies, Senior Vice President covering med devices. Based in New York City, been with the firm for 11 years. In terms of aesthetics, I worked on the merger of Vesper and Hydrofacial, and then also on Establishment Labs IPO and subsequent follow-on. Nice to be with you.
Great, thank you. So let's start off with our investor friends here. We've heard about how aesthetics is a big space. It's growing almost unanimously. We've heard everyone believes in the growth, especially post-pandemic or in this endemic phase. Where do you guys gravitate towards? It's a big space, so what excites you about aesthetics?
Yeah, I think to your point, it is a really broad and interesting part of healthcare, and you can even see that today. And I just like to commend the organizers for putting forward so many really interesting and innovative technologies here. From our end, we focus on novel, natural, non-animal derived, and really things that drive forward personalized medicine, whether that's regenerative, genetic, the biomarkers that enable us to figure out who looks at and who will respond, patients that will respond to those treatments, And then, the surrounding natural products, fillers, injectables, and scaffolds. I think Brent put it really well when he was up here earlier. There's a lot of science that's now going on in aesthetic medicine, and it's driving an incredible amount of innovation. We're very busy, and it's going to make for a really interesting next few years for us, and I think for the space as a whole.
Yeah, we develop like most firms that are making investments, a theme or a thesis around a sector. And in aesthetics, it's pretty easy. It's like beachfront real estate, and it shouldn't ordinarily go down in value. Not that managing these companies is easy. It's not. But we won't rule anything out. With an aesthetic procedure every second in the United States, and with the market having the potential to double over the next 5 years, we won't rule anything out. Now, we invest in companies that have positive revenue, EBITDA, and cash flow, so it's a little bit different than Ethan. We're, of course, focused on facial injectables and any skin rejuvenation procedures, but as everyone in this room knows, that's a pretty high hurdle because the products out there today and the companies that market them are very, very high quality, but you can't ignore that part of the aesthetics market. It's too profitable. We're also really intrigued by what's going on in regenerative medicine, hair restoration, microbiome skincare, and of course, we heard a lot about various body contouring procedures, whether it's volume, laxity, or cellulite. And so those are areas that we focus on, and when we see companies operating in those sectors, like I said, that have revenue, earnings, and cash flow, then we're going to pay close attention.
Great. So with our strategic friends, you guys have made some very interesting acquisitions recently with Galderma and Elastin, with AbbVie Allergan Aesthetics, and Soliton. We've heard from both companies today. What other types of assets are you looking to add to your portfolios?
Yeah, so with Allergan Aesthetics, we always start with what the top consumer needs are. And, we study that. Based on that, we look for innovation that complements our internal innovation efforts. So, it's a little bit like Bill said, we look at everything. We get inbounds from all different facets, and we don't discard anything just because it's not a core area of business for us. Now, if we do want to go a level further in detail, we do have 5 business pillars. Those are toxins, fillers, body contouring, plastics and regenerative medicine, and skin. So we're particularly looking for innovation in those space, tissue regeneration, new delivery approaches that improve the injector experience, skin laxity, same thing probably that all of us are looking for. But we don't turn away anything. We look at everything. So please send us stuff if you have stuff that you'd like us to look at. Carrie.
Yeah, so at Galderma, we're a little bit more focused than Allergan. So as you've seen, we focus really in the injectable space. It's our core competency. We're very successful there. Of course, with Elastin, which is a really great partnership and acquisition, anything that's really going to complement our portfolio is absolutely on the table. So with Elastin, the unique positioning of having pre- and post-procedural complements to injectables, it was a huge opportunity for us to branch into the skincare space. So for us, it's very similar. We're looking for a technology that is really meeting some unmet need. It's backed by science, and it's very differentiated from what's there. We see a lot of Me Too products come into the space, and we really want that next generation product. So next generation injectable and next generation, biostimulator. You heard a lot today about personalized medicine, regeneration. This is absolutely something of interest to us. We have one of the only pure biostimulators on the market today, but what's next? We want to make sure that we're definitely playing in that space and expanding our portfolio to meet those unmet needs of the consumers and our customers.
Dan, you've got the pulse on other strategics. Anything to add, other areas, or are they all covered here?
Basically all covered. I think, 2 areas that we hear the most about is skin rejuvenation and body contouring, and that's obviously very broad, big TAMs. But I think if you just peel a layer back and just think about the themes. So theme number 1, I'd say, is minimally invasive, right? A quicker recovery time, and something that goes from what we think of health versus wellness and kind of a regimen or hygiene. So that's a big shift we see. Omni-channel is another one, which kind of, again, goes to wellness or hygiene, right? A little bit more repeatability, easier to get into the door, and there's a little bit less of anxiety, right, as opposed to a regular way procedure. If you're going into more of a retail setting, you feel a little bit more comfortable. Data is another piece that we hear a lot about, whether it's precision medicine, tailoring to a certain individual who's coming in, but also, too, for the next generation product, right? We heard about AI and imaging, how to get things as precise as possible. So maybe not for this round, but for the next generation product, et cetera, or imaging machine. Those are a couple of things we hear a lot about.
Yeah, no, that's great. Now I'm going to bring it back to our investor friends here. There's companies in the audience that are trying to raise capital. It'd be great if you could just talk about what you look for in companies, what your criteria, stage, et cetera.
Yeah, sure. I think we actually, all three of us invest in different parts of the company life cycle. So just generally speaking, I tend to come first, then Jessica, then Bill, and so when we work with companies, it's really pretty early. So we're focused on the bread and butter of product market fit. Is this a truly novel technology? Or is this a solution, looking for a problem? Next, and probably most important in what we do is management. In early stage companies like we get involved with, having a strong founding team and a strong committed management team is vital. It is a long road from me to Jessica, Bill, to Allergan. It takes a lot of stamina and a lot of drive. And lastly, and this is key to our underlying thesis, is we look for places where we can help. Where can the Gore Network truly help push companies forward and help them get through their milestones so that we can shorten the timeline for the four of us.
Yeah, I would second several of the things that Ethan just said. When you're investing in a company with revenue and earnings, and we're getting into an investment for at least 3 to 5 years. And our exit options, as most of you know, will be an IPO, sell to another financial sponsor, or sell to a strategic, but we're in it for the long run. The first thing we're going to spend time on is the management team. And the watch out that a private equity firm has is their key man risk. Because no company is inherently valuable in and of itself. Its value is directly related to the management team. And that's a really important piece of it. Then we look very carefully at the quality of revenue, earnings, and cash flow, and we look for irregularities or unnatural increases or decreases or gains and losses in historical financials. And they're going to exist. You just want to understand them. EBITDA, of course, is important. It's talked about in every transaction, but it's a very deceptive financial measure. A private equity firm is going to look carefully at cash flow, more than accounting profit, essentially. You look for a competitive advantage in the company that's sustainable. Is the technology or product? If it's not superior, let's face it, very few are really dramatically superior, but it's got to be different. Growth prospects, the watch out for an investment firm is, are we acquiring something that is at or approaching a peak? And so if you're talking to an investment firm, you want to explain why that may not be the case. And investors are going to focus more on downside risk than upside potential. That's just the way it is. Now, fortunately, in aesthetics, every industry trend is a tailwind, not a headwind, and the TAM is big, and the penetration of the addressable population is low, and so you have a pretty good story there. And the last thing I would just say is platform capabilities are important to private equity firms. You want a company that got an ERP system, a CRM, cybersecurity. They're automated where they need to be automated. And that's going to be relevant, not so much if you're going to sell to a company like Galderma or Allergan, but it's relevant if you want to acquire other companies or if you decide to go public. And those would be areas that we spend an awful lot of time and diligence on.
Yeah, no, thanks, Bill. Just quickly, typical check size?
Our initial check sizes are $500,000 to a handful of million, and then we look to continue to support the business through subsequent rounds. So total commitments of 5 to 15.
Typically, ours are larger. We don't make as many bets as Ethan's firm does, but usually our check sizes are between 25 and 75 million, with an average of 30 to 40 million.
Yeah, and so at 1315 Capital, we're right in between, somewhere between 20 and 40 per company. So, well, let's turn to the other side of the spectrum. Let's talk about exits here. There are companies here that are thinking about M&A, about taking companies public. Dan, how should companies think about how to position themselves as they think about that next stage?
Sure. And if it makes sense, maybe I'll just talk a little bit about the markets generally.
Yeah.
So there's, over the last 2 years, you've heard a lot about SPACs, IPOs, and M&A exits. I think just generally looking at the equity market, right, we've all seen this transition from growth to value. So I generally say SPACs is probably an area which is very challenged, with redemptions being around 80 to 90%. It's not a very viable option, considering all the dilution that you take on for a minimal amount of capital. And the IPO market, it's battling back, and we suspect once inflation gets a little bit more under control, it'll be a better option. And then the M&A market, it continues to tick along. A lot of capital available. I'm sure folks to my right can attest to that. In terms of preparing for an exit, it's fairly similar depending on how you're, regardless of how you're looking at it. I think most folks on the investor side, they are transitional owners, despite what some folks may say, and they're going to look at it a little differently. So when you're thinking about an exit, strategics tend to have a longer-term view. It's an investment into a technology that can be a little earlier. On the financing side, it's usually based on some types of rigors. So for an IPO, the greatest bellwether is your revenue. Typically, before everything got crazy with SPACs over the last 2 years, $25 to $30 million of run rate revenue, so your last quarter annualized, was the typical sign that you were ready to go public, right? Because then you're able to predict your revenues, guide the street, et cetera. So that's the general contour and how to think about the various different types of exits.
Yeah, no, that's very helpful. I want to turn to another topic. It's come up a little bit, but not that much. We've talked a lot about product and technology science. What about channels? And I'll ask our strategic panelists here. It's not just selling through the physician office anymore, right? Omni-channel, DTC. Companies are thinking about different ways to access the consumer.
Yeah, so I would say that all sales channels are important to us. It's like asking me who my favorite pet is. I can't decide. Our core channel obviously is the professional space. That's where our core business is, but we know consumers are the ones that are driving what's happening in aesthetics, right? So the consumer channel data is very important to us. So really when we're looking at evaluating opportunities, channel is like secondary. We're looking at science. Is the science solid? We're looking at the innovation. Are we solving a need that has growth potential? And then based on that, it's really where we decide to invest.
Yeah, so I agree. Not that much to add. It's very similar for us as well. I think the other consideration is just, when you see companies succeed or technology succeed is when they have a very customer-centric approach. You heard of that also earlier today. But when you really understand, the customer journey, the consumer journey for us, they're both extremely important. And when someone comes with a new asset or technology that ignores the other, and you're not looking at both, it's not going to fly in our space. Because this is cash pay, so yes, the physician has to believe and the science has to be there to actually have an efficacious and safe product. But if you don't have a good reason why the consumer should actually buy it, and that's kind of, again, getting away from this Me Too thinking of what's really different about it. How are you going to actually communicate this through to that consumer, the channels you're going to use to reach them? It's not going to be as successful. So that's a really key thing that we also look at when evaluating other companies and opportunities.
I may ask Bill for you to comment on channel. I mean, you've worked across it from a strategic angle and also with portfolio companies.
A lot will have to do with your portfolio, obviously. And, if you never want to disintermediate your primary customer. And for all of us, or at least at Allergan, let's be clear, that's aesthetic derms and plastic surgeons and med spas, and they are our customers. Now, we do an awful lot to activate the consumer on a national level, but the practices are doing an awful lot on a local level to activate consumers. But when it comes to DTC, I will tell you one of the things that was a benefit at Allergan and probably at Galderma is data, whether it's on providers or whether it's on actual consumers. And so you can have a CRM for doctors and a nice list, and you understand what their purchasing habits are, and you know where their offices are, and then you can have a loyalty program, and then you have lists of consumers. Those are incredibly valuable assets. One, for just operating your company. Forget about an exit. They also become very valuable assets where you can get a premium, multiple expansion, because you have, outside of your product line, you have data that can be monetized in many different ways. And so when I think channel, if you're running an over-the-counter business, you may have an e-commerce channel or club or retail or premium specialty like Sephora, Ulta, and then you have physician, but you have to watch out that there's not channel conflict. And some businesses are, multi-channel in that regard. But if you put that aside, if you can build that data, I can tell you, and it's hard to come in aesthetics. In biopharmaceuticals, where I spent 25 years, you go to CVS or Rite Aid, and there's a company called IQVIA, and you get all the data you want. You can get it daily. It's awesome. It's amazing. And you get a list of doctors, and it's perfect. But in aesthetics, that's not the case. And all the work you're doing every day, you're collecting data that can be very valuable when you think about the value of your company, regardless of the outcome.
Yeah, no, thanks, Bill. All right, so since we're the last panel, we're going to do a lightning round here. All right, we'll go down the line. What area of aesthetics do you think will be the fastest growing in the next 3 to 5 years?
I think we're going to move south of the face and into more body contouring, both filling and shaping from a device and a filler perspective.
Since I'm not going to give the same answer as Ethan, I'm sticking with the face.
Since I don't want to give the same answer as these two, I'm going to say the continued destigmatization of the space is just going to drive all the growth.
I'll provide another different answer. I'll say skin quality, and that can be both body and face.
There you go.
I'm a banker, so I'm just going to repeat stuff. I'm going to go with face.
All right. Okay, one more. What's your favorite body part?
I think from a proof of concept perspective on the body contouring side, that buttocks and thigh region, I think is going to see a lot of growth.
Yeah, I would agree with that. I thought a lot of the technologies talked about, facial injectables and skin rejuvenation procedures are, they're really high quality. The outcomes are awesome and there's great demand. But I think what we saw today from a number of the different companies in the body contouring area, laxity, cellulite, was really pretty interesting and could be sort of another frontier for the industry.
I think skin quality, just because there's a number of different issues that you can address, and also there are several different approaches that you can use to tackle skin quality.
It's all about the butt.
All right.
Let's just go generic body contouring.
Okay, and I'm going to go with the eyes. All right, well, thank you, everyone. Terrific panel, and I think that's a wrap.
You have careers